We're pleased to be with Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Frank, thank you for being here with us.
It's great to be with you.
So I understand that recently you were in Washington meeting with the Treasury Department. Can you share with us what that was all about?
Well, I was at the White House also in their executive Eisenhower complex, which is amazing how big it is, and spectacular architecture, if you like that. But it's really trying to get a pulse. Will Trump be able to fast track his agenda of infrastructure spending, pipelines,
right,
et cetera? And what is the Treasury Department looking at? So the Treasury Department is interesting enough. They look at gold every day, and they look at the price of oil. They're very sensitive to capital markets, and they're very sensitive to regulatory issues that are affecting liquidity. Which is really interesting to hear that that's being elevated much more than under the Obama regime. Under the Trump regime, they're much more sensitive to free market capitalism.
Right.
And I think the other part is looking at how are they going to execute when you have so many regulations to even create change. But I thought it was interesting finding out that Canada's had to delay the capital gains tax. Why? Because if Trump gets his capital gains tax through, and Canada all of a sudden makes it too expensive, the Canadian dollar falls to 60 cents.
Right, exactly. Now, interesting that you mentioned that they follow gold every day. What are they thinking about the GDXJ and their rebalancing?
That doesn't. That's nothing for them because gold is the fourth most liquid asset class in the world, and it's a reflection of money. So that's what they're more sensitive of.
Okay.
But the GDXJ, there's no doubt that what we've witnessed is that of $200 billion of market cap gold stocks, the GDXJ is $17 billion.
Yeah.
It's GDX and the GDXJ combined. And the GDXJ has been extremely disruptive to the formation of capital. Money is not going into active fund managers, even though we outperform it. It's just people who want to trade off of the GDX and GDXJ. $5 billion went into it.
Yep.
They all of a sudden start owning too many companies at more than 20%. So that worried them, and now they're just blowing out stocks, and it's very disruptive, but it's a good opportunity.
And why do you say that? You're talking specific about small caps.
Small cap, especially some of our holdings like Klondex. It's a great stock. I think it's got an incredible growth profile that we like to look at, where the revenue last quarter is above the average over 4 quarters.
Right.
The cash flow last quarter above the 4 quarters. They're very conservative how they run their company. Wesdome is another company that's had great success, big discovery, high grade deposit. And it's all of a sudden goes into it, and the stock takes off, and all of a sudden they make a decision change, and they're blowing $3 billion of junior gold stocks out. That's a buying opportunity. Very
big buying opportunity. And what will happen to gold prices? I mean, what is your outlook for it for the next few months?
If Trump cannot get through the fiscal stimulus that he wants to push through, then real interest rates are going to remain negative and rates are trading lower. And that's what we're seeing. But we're also seeing inflation. The core inflation was higher than they expected today. CPI was 2.7. So if you take a look at 10-year, 5-year, why buy those bonds? You're embedding losing money. So they have to keep, the monetary policy has to keep rates so low, otherwise the economy comes to a halt.
Now, we just talked about the inflows into the GDX and the GDXJ. Is there a solution for that?
Well, I think there's going to be other ETFs to come out that are better than that. Probably like a smart beta and truly intelligent ETF to look at that space. But otherwise, it's very disruptive, but I think good active managers can show their ability to outperform. Right.
Now let's move on to some new technology that you always like to highlight. Why should investors look at new technology when trading?
Well, this whole thing of artificial intelligence and data mining. It was expected that 3D seismic for oil stocks, et cetera, was critical to lower the risk and capture opportunity. The same thing now is going with stocks. And the biggest buyers of these gold stocks, really, the trading, is if it's not the ETF, it is quant funds. And so what we found was that quant funds don't look at NAVs, which most of the street tries to publish as one is cheaper than the other. They look at price to book. So the royalty companies have outperformed over time. They look at your SG&A, which is basically your costs of running your business versus your revenue. So the cheaper your SG&A, the higher the probability they'll buy your stock. If your revenue for the last quarter is above the 4 quarters, they'll stay in your stock. If your cash flow for the last quarter is above the average for 4 quarters, they're in your stock. If that quarter falls below, they're out.
Okay, and do you have any royalty names at this time?
Yes, oh yes, Franco-Nevada. We love Franco-Nevada, Silver Wheat and Sandstorm, Osisko. Yes, we own them.
All right. Now let's talk about PMI. So you and your team follow PMI. Can you explain to us why and what that tells you right now?
It's like driving a car. Yeah, GDP is looking out the rearview mirror. So if we're looking at the rearview mirror and we try to go 60 miles an hour, we're going to crash.
Right.
So we have to be looking forward. PMI is a forecasting tool that you get a big order to make 5,000 engines, and therefore you're going to have to buy a lot of copper and a lot of steel, and so therefore now you feel bullish. So it sets up the demand for the next 6 months while you produce it, that you're going to be buying metals, but guess what? You can consume a lot of electricity to manufacture such a product, and so therefore now you need energy needs. So it's a great precursor to anticipate future growth. So it's like driving a car, looking forward, and it resets every month. And our quant models have said whenever the 1 month is above the 3 months, there's a 70% probability of energy, copper, et cetera, to be rising. If it goes below, then there's an 80% probability of those metals and oil falling.
Right. Well, thank you so much for those insights, Frank. But before we close, I want to congratulate you on a couple of awards you've won recently. Can you explain to us what they were and how you came to win it?
Well, we have a great team, and we believe in explicit knowledge, like our quant models, and tacit knowledge, going out visiting analysts, visiting properties, and that combination. So, but I have a great team, and so with that, we've won Lipper Awards for best over longer time periods, and last year was the Morningstar Award for best of the class around the world. And we have to reinvent ourselves all the time of looking for factors that will give us a competitive advantage.
Of course. Well, thank you so much again for your insight today, Frank.
Thank you.
To learn more from experts like Frank, you can check out our other videos on smallcappower.com.